Hey everybody, this is John and welcome to the free video, and let's just kind of dive in here and take a look. So this is TLT, and you can see when TLT bottomed here, that's also when those interest rates associated with the longer end, the 10, 20, 30-year bonds also bottomed. And so as this rallied, that means that those interest rates went down. And I know it seems odd because it's like, wasn't the Fed raising rates? But yes, they're raising the short-term rates. The long-term rates are based on a lot of other things like economic forecasts, inflation, and things like that. So more recently, though, you can see that TLT has come down pretty hard, which also means that these interest rates have actually turned around and started to rally again, right? And so what gives here? Well, what's happening here is that it's just moving with the dollar. And the dollar here, you can see, had a nice move down and then bottomed and rallied hard. And of course, the bonds most of the time will move inversely because it's a reflection of longer term rates going up, which can support the dollar. So what does all this mean? Just think of it this way. If the dollar is going up, that is fiscal tightening happening. And when we had this run here, kind of in the first half of the year, we had the dollar going up. Okay, bonds were cratering, which means longer term rates were also going up, and then commodities like oil and wheat were also going up. And so this was the fastest fiscal tightening conditions in history. Now, I'll say something like that, and some people are like, well, the Fed just raised rates a couple times. That's not a big deal. Again, that's all they're doing is the short-term rates. These other three things affect so many things. So then we got to a point where it's like, okay, the Fed's starting to relax now. They did that, that last rate hike of another 75 basis points. Now they're going to relax a little bit. And then some stuff started coming in like, man, it's still too strong. And Bitcoin started to rally. And then you got Bed Bath & Beyond starting to rally. And it's like, and then the Fed started making some comments again, like, well, maybe we need to keep raising rates. Boom, dollar goes up, stocks go down, and yada, yada, yada. So this week, they're in Jackson Hole, and they're really just trying to figure out how do they frame this. They either need to come out based on what they're seeing and say, you know what, inflation is a menace, and we need to actually even get more aggressive than we originally planned. Okay, in that case, stocks would crater. Or the other extreme is going to be like, you know what, guys, this looks good, and I think we're done. All right, and I don't think either one of those two is going to happen, but somewhere, what's the happy middle? So, for example, today, and I'm getting this wrong because this is off the top of my head now, but I think new housing starts, or maybe it was existing home sales, was down 12%, which was way lower than expected. I think the forecast was for down like 2%. So it's like, whoa, okay, well, guess what? That's bad news, but it's good news. It's showing that real estate is coming off, and that's the kind of thing that the Fed wants to see. They need to crush demand in order to crush inflation, and demand for real estate is a big part of that. And so that is actually something that they could look at and say, you know what? Maybe we don't need to come out hyper aggressive. We can just come out and be middle of the road saying like, yeah, we're going to stay the course, but we're not going to go crazy, and we're going to continue to evaluate the data. And generally, I would say that would be a positive for the markets. So at this point, I personally don't think the market is going to crash. There's a lot of comparisons right now to 2008. I lived through 2008. This ain't 2008. 2008 was the world financial system imploding on so many levels, and that's not what we have here. This is things got inflated and bloated, and and now they're coming home to roost. But keep in mind, here's this swing high to swing low. We had this fantastic rally, and all we did was kind of take out the high, and we hit the 1272 extension about the same time VIX hit 20. Guess what? It's time to pull back. So the question is where do we pull back to? I do think that, and again, it's going to depend on what they say in Wyoming, but I think we're going to find our footing this week. We're going to put in a low, and believe it or not, I do think that we can retest these highs or even break through these highs into mid to late September. Okay, and then what happens? The VIX comes down to 20 again, and I do think at that point we could actually see a steeper decline. But we'll cross that bridge when we get there. But that's what I'm looking for in the short term. All right, hope it helps. You guys have a good one, and we'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.